So in today's video, I'm going to share with you guys how to grow a $10 account on boom and crash trading. All right. So we all know that the boom and crash market is a highly volatile market. And when you're trading this type of indices, you need to be extremely watchful on the market chart. All right. Now I'm going to share with you guys the way you can grow a smaller account, such as a $10 account on boom and crash. All right, with a simple strategy, and I want you guys to pay a close attention to what I'm about to share with you right now. So we're currently looking at the crash 1000 index market. All right, and what we're seeing here on the latest market is that the market is currently buying right here. And if you have a $10 account, you might want to set your lot size to the lowest lot size as possible. All right, what we're seeing right now is a spike, and the market has currently gotten to the oversold region. All right, so we're expecting a buy, meaning that we're expecting an increase in price movement to the higher side. Okay, now if you have a $10 account, the only method you can use to grow your account up to $100 account is with scalping method. So right here, this is a good opportunity for us to place a buy. Now we're going to be taking just few candlesticks, so I'm going to share with you guys two indicators you are going to use to grow this smaller account. All right, two indicators only, and when you're using these in two indicators, you're going to be taking two candlesticks each. You're only placing just one trade, taking two candlesticks each. So we're going to put on the relative strength index first on our chart. We're going to put that on indicator window 1, which is the main window indicator. So we'll put on the relative strength index, put the period on 14, then you apply to close. Then the level is going to be on 90 and level 10, while you put the style on 3 pixels. Then the color is going to be on red. Then you put the style right here on blue. You put the pixels, which is this line here. You put on the third one right here. All right, then you put a straight line pattern at this first one, then you click on done. Okay, now this is this first indicator, the RSI, and the RSI here on the level of 90 and on the level of 10. All right, this indicator actually works and it can help you to grow your smaller accounts. Now the next indicator which we're going to use is the MACD. All right, I'm going to put on the MACD, which is the MACD indicator. Put a fast EMA on 14, the slow EMA on 24, and the MACD SMA on 10. All right, then the main, put it on 3 pixels, then the color black, the signal on 3 pixels as well, then the color red. Then you put them on this first straight line pattern. All right, then you should click on done. Okay, now this method that I'm about to share with you guys right now is a very easy method for you to grow your $10 account into a $100 account through scalping. So we're going to be taking just two candlesticks each from this market, like I said. All right, now if you take a look at this point right here, price is currently at the oversold region, right? And we are seeing a buy. All right, but if you take a look at this on the downtrend here, on the MACD is a downtrend, and whenever there's a downtrend on the MACD on crash, the market is going to spike, meaning that spike is going to come into the market once there's a downtrend of the MACD. All right, spike always happen during this point, the downtrend of the MACD. Take a look at that. Okay, spike always happen, but what we're seeing here is that price is actually at the oversold region. So what you do is to place a buy for two candlesticks. A spike won't happen during this point, even though the MACD is giving a signal at the downtrend. So this is an opportunity for you to place a buy into the market and scalp the market and take just few candlesticks. Two candlesticks from the market, then you are out. The reason you are taking just two candlesticks is because you have a small account. All right, it's because you have a $10 account, and if a spike should come through on a $10 account, that account will be over. All right, that account will be over if a spike should come. So that's why you are taking these measures, this risk management, taking just two candlesticks from the market as scalping, then you're taking the profits. All right, so you take those profits, then gently, little by little, you accumulate these profits from two candlesticks each. You keep accumulating the profits, and it gets bigger within a particular period of time. All right, so you see, taking just two candlesticks within a trade, then you wait for another good opportunity again for you to place another two candlesticks to take that profit, right? So once you have successfully gotten two candlesticks from this entry, then you exit, then you wait for another good opportunity. Now there may be an example whereby the market will continue to buy upwards. Even though you have taken your two candlesticks, the market will continue to buy. All right, what I'm about to share with you right now is market temptation. All right, market temptation. This is when the market tempts you. All right, the market tries you, it keeps on going upwards. That is a trick this market always gives you. When you place another buy at that point, the market will sell. Trust me, guys, the market is going to sell if you place another buy during that point. So once you have gotten your two candlesticks profit, exit immediately and you wait for another good opportunity. Do not place another buy just because you saw that the market continues to buy, so you want to go in a direction where the market is buying. No, you don't want to do that, because if you check back, the market has been buying for a particular period of time. So let's say, for example, this market bought up to this point right here. The market bought up to this point, right? It bought up to this point, then it continued to buy above, and you saw that this market is at this point. All right, the market's at this point. Now your mind is going to tell you to place a buy. Do not place a buy, because if you take a look, the market bought from here up to this point and even above, and the market has been buying, and this trading is called crash and boom, meaning that the market will crash and the market will boom. Right now, this is crash 1000 index. The market will crash, it will go up, it will crash. That's how the market always is, right? And whenever the market has bought to a particular period of time, the market is going to sell. A sell is going to come into the market. And remember that you have a smaller account and you don't want to make the wrong move during this market. So that's why you're taking those smaller advantages of price movements, taking just two candlesticks from the market and taking your profit. All right, now take a look at this, guys. So now, when is the best place to place a buy and a sell entry position? Now, if you want to scalp this market and if you want to catch spikes, when you want to catch a spike on this crash 1000 index market, or even a crash 500 index market as well, if you want to catch a spike on this market, you wait until price has gotten to this level at the overbought. Right now, this is the MACD. You wait until the price has gotten into the overbought region, then you place a sell to catch the spikes. If you trace it up here, you can see at this point that immediately price gets to this level of 90. It took about 5 candlesticks before the spike came into the market. Take a look at this. It took about 5 candlesticks before the spike came into the market, and whenever price gets to the overbought, it's a good entry for you to place a buy. You take just 2 candlesticks and exit the market. Some traders are going to say that the time interval for the market to get to the overbought and to the oversold region, it may take a little bit of time. All right, but remember that you have a small account and you want to manage that account. You want to manage your risk, right? You want to manage your account and you want to grow your account. So you don't want to put your old account at risk when you're trading. So that's why you need to use your psychology in the market. You need to see when the market is going to crash. You need to see a good entry position for a buy and a good exit position, right? So you need to wait and give it the time. All right, you need to wait and give it the time, because trading is not a get rich quick scheme. All right, it takes time for you to make profit. So when you follow this strategy that I've just shared with you guys, taking just 2 candlesticks from this market within a particular period of time, wait for the exact moment. Like if you take a look at this point right here, at this point you can see exactly when price gets to this point, the market sold here. Even though it's a little amount of sell, but it's still sell because it's still accurate. All right, and what you want to do on the market is to take just 2 candlesticks on the market, right? You just scalp the market, taking two candlesticks as your profit. So you wait until when price gets to the level of 10, take 2 candlesticks on the market. If you wait all the time in a day, taking just 2 candlesticks on the market, you can make up to $3 to $5 from this scalping using the lowest lot size. If you wait when price gets to the oversold region, you're taking 2 candlesticks each, you can get up to $5, $10 a day with just a $10 account. So let's say you start a trading journey, right? You want to grow a $10 account. On Monday, you start on Monday, you use the lowest lot size. So on Monday, you grow that account into a $15 account. On Tuesday, you grow that $15 into a $20 account. So you see, you set a small goal for yourself. You set a $5 goal for that day. Then you take this 2 candlestick strategy. You grow the $10 into a $15, meaning that you gain $5 profit from that day. Yes, there's going to be some loss on the trade as well. All right, there's always going to be a loss on the trade, but you're going to count more of your profit than your losses. So use your $10 account to grow a $5 account. It's possible because I've done this. That's why I'm sharing with you guys. Okay, that's why I'm sharing it with you guys. You make a $5 for that day, then the next day you make another $5. You turn that $15 into a $20, that's $20 into 25, 30, just like that. And before you see, in a week, you would have gotten up to about, a week, you would have gotten up to about $40 to $50 in a week. So you see, you take it step by step, step by step. And remember, guys, the more lot size you use, the bigger the profit. The small lot size you use, the smaller the profit. So because you have a $10 account, so the profit which you're going to be making is going to be little profit. All right, little profit. And you're going to use your psychology in this and a better risk management technique, which I'm telling you guys right now. Okay, now this is for Crash 1000 index. I'm going to share with you guys how to do this on the Boom 1000 index as well. All right, now we're going over to the Boom 1000 index market, and we're using the same setup and parameters for the Crash 1000 index market. For the Boom 1000 index market, when the MACD right here gets to the level of 90, you place a sell, right? And if you take a look at this, guys, on the Crash 1000 index, it was when price gets to the level of 10, that's when we place our buy. And here, when price gets to the level of 90, we place a sell. So you can see what I'm talking about. The Boom 1000 index, which is the boom market, price sell, it continues to sell. All right, then spike comes through, then it starts to sell again. While on the crash market, the market continues to buy until crash come into the market. When the spike comes in, then the market continue to buy again. I hope you understand what I'm saying to you guys. Okay, now when price gets to the level of 90, you place a sell, taking just 2 candles. So what you need to do is to always wait until price gets to the level of 90 and you place 2 candlesticks for your entry. That's the 2 candlestick you want to take from that market. All right, I hope you understand. You're taking just 2 candlesticks, then you wait again until price gets to the level of 90. Then you take 2 candlesticks, you wait again until price gets to the overbought, guys. The overbought. And when price gets to the level of 10, the market will buy. Take a look at that. Price gets to this point, and if you trace it up, immediately from this point, the market buys. All right. So remember what I said, guys, on Crash 1000 index, and remember what I'm about to tell you right now. It's because you have a smaller account, which is a $10 account. You want to take just 2 candlesticks at a time. You take just those 2 candlesticks in a good entry point. 2 candlesticks in a good entry point because you have a smaller account. So you want to manage that account as possible as you can, right? You have just $10 account, taking just 2 candlesticks at a time, and you set your lot size to the smallest lot size as possible. All right, then you take 2 candlesticks at a time, and with time, those profits which you are making from scalping the market, taking smaller advantages of price movement, right? You're taking advantage of price movement, and with time, those profits will accumulate. They will keep adding and turning into big profit for you at the end of the day. All right. So if you have a smaller account, like $10 account, you set your goal for $5 for that day. Then you keep taking 2 candlesticks, right? And let's say for that day, you make up to $5. So you have turned the $10 into a $15 account. Then you start until the next day again. All right. When you start until the next day again, you now grow that your $15 into a $20 account. You can see, guys. So you make $5 the first day, the second day you make another $5 using smallest lot size until you have met that maximum goal which you set for yourself. All right. You see, you've turned your $10 into 15, into $20, into 25, into 30. Just like that, the account continues to grow until it has reached a standard account. All right. Let's say you manage to grow that your $10 into $100 or $500 account. When you have gotten up to a $500 account, then you can increase your lot size. All right. You can increase your lot size because you now have a bigger account. So when you increase the lot size a little, then you keep taking 2 candlesticks. So when you have a higher lot size, when you make profits, your profits are going to be big. But also put in mind that if you make losses, your losses is also going to be big as well. All right. So guys, I believe after watching this video, you found value and understand what I've said in this video. All right. So if you enjoyed this video, do it to like and subscribe to the channel, The Daily Forex, for more awesome trading tips and strategies. I will see you guys on the next video.